Hi, I'm John Stevenson, the Guaranteed Retirement Guy. Today we're going to be talking about the ultimate retirement checklist that you need to have before you retire. So if you're thinking about retiring, or maybe you are already retired and you're just thinking about your assets, your liabilities, and you're thinking about what do I need to plan to have a comfortable and safe retirement. And when I say safe, I mean safe from market fluctuations. And of course, I am the Guaranteed Retirement Guy. I do talk about annuities in many of my videos, and I talk about guaranteed retirement income. If you want to book a call and chat about all of the best annuities available, please feel free to do so. There is a link below this video. But for the purposes of this video, we're going to be talking about the ultimate retirement checklist. And I've basically am focusing on 8 things that you need to think about. Okay. All right. So number 1 is to evaluate your assets. All right, what I mean by that is take an inventory of your assets and also look at your liabilities, okay? And obviously this goes without saying, I'm sure you're already doing this, but when you're looking at your assets, you got to think about, obviously you have your house, so you've got your liquid, okay? You've got liabilities and you got to figure out, all right, well, how much do I need to pay off? Should I pay all of it off or should I wait to pay some of it off? It just depends on, how long you're going to be working until you retire. So a lot of things to think about when you are taking inventory of your assets, because if you don't have a list of what you have, and it's funny that I need to say this because there are people that I meet with that will forget about certain assets that they have. We'll be on a call and then we'll be talking about 401k and IRA accounts. And then all of a sudden at the end of the call, they're like, oh, wait a second. There's this old 401k account. It's got like $120,000 in it. Totally forgot about that. And I'm thinking, wow, it's like $100,000 you forgot about. So make a list, okay? Go through all your assets, every single, qualified account you have, your retirement accounts, your IRAs, Roth IRAs, I don't care how small, make sure you tally all of them up, okay? You want to make sure that you are properly prepared before we go to our next steps. Number 2, build an emergency fund. Of course, this goes without saying as well, but I am surprised at how many people reach out to me who want to purchase an annuity. They want guaranteed income and they've got let's say $400,000 in their 401k, and they want to roll it over to an IRA and purchase the annuity contract inside of it and have that guaranteed lifetime income for the rest of their life. The problem is they don't have any other savings. And so what the insurance company looks at is liquid outside of that annuity. And why is that? Well, it's because when you fund an annuity, annuities can have surrender charges if you cancel them or if you take out more money than you're supposed to, especially when they talk about the free withdrawal amount. So usually you want to have, I would say, not more than 70% of your liquid assets in annuities, but it's more like 30 to 50% if you can keep it down that low. So everyone's situation is different, but just think about that because you have to have, and what I would recommend, at least 6 to 12 months of emergency savings, at least. If you can have more than that, all the better. And if you can have even money on top of that to keep in the stock market, if you're still wanting to be in risk, if you're still wanting to maybe purchase real estate, just any other type of investing, you should have an account for that. Okay, have an account for your risk-based investing. Okay. And of course you want your emergency, your liquid, usually in a bank or a CD or something very, very liquid, something easy to get to, maybe money market, but something that you can get to quickly in the case of an emergency. Okay. Hopefully that's still earning a decent return, but you want to make sure that is available, especially when you buy an annuity contract, because if you got an annuity contract that you purchase, and let's say it's going to guarantee you $50,000 a year in guaranteed income the rest of your life, on top of your Social Security and your pension, that's a real asset, okay? That's a contract of income that you cannot outlive. You don't want to have to dive into that because of some emergency, okay? So you want to make sure that you have enough emergency funds in place. Number 3, eliminate debt. If you can, eliminate all of your debt. And I know that most of you are probably trying to do this. Most people that are meeting with me are either out of debt or they are trying to get out of debt, and they're hoping to be out of debt by the time they hit retirement. And of course, yeah, that's a very good goal to hit because most of us, we want to have our house paid off. We want to be able to have plenty of cash in the bank. We don't want to own anything on our cars. And if we do, we want it to be very, very small. And so the same thing with credit cards and any other type of consumer debt. It's a good idea to just unburden yourself from that debt load. Think of it. If you can get rid of some of that debt or all of it and be able to just have really these minimal obligations. If you have no mortgage, you have no credit card debt, you have no car payments, really all you have to worry about is just the bare essentials. And then of course, vacations, things like that. It just makes things a lot less stressful in retirement. If you have Social Security coming in, great. If you got a pension coming in, and if you have, a couple of annuities or one annuity, just providing another layer of income on top of those, that can make you very, very comfortable in retirement. And of course, the stress is a lot lower when you don't have any obligations that you have to meet every single month and try to pay down this debt load. Okay. And you can look at, and a lot of people will look at these and they're saying, well, I'm only paying 2% or 3% interest on it because maybe you were lucky enough to get a mortgage a few years ago and you still have that mortgage. And then of course your other investments, maybe you're making 10%. Okay. A lot of times there is an argument to not pay off your debt because you're making more somewhere else versus taking that money and paying off something that is charging you a relatively low rate of interest. So sometimes though, it's not always about money. Sometimes it's just peace of mind. And there are people that pay off their debt, even if it carries a low rate of interest. And that's why they come to work and they whistle while they work because they just don't have the stress. So number 4 is determine your retirement needs. Well, what is that? Well, you've got your regular bills. Maybe your bills are maybe they're $3,500 a month. Okay, great. So you got to make sure that that is met. And maybe you're lucky enough to have your Social Security cover all of that. But then maybe you have some future medical expenses that you hope don't happen, but a lot of times they do, and they can be very, very pricey. And so maybe you want to purchase a nicer medical policy for yourself. Well, you need more income for that. So a lot of times people will purchase an annuity with me because they want as much guaranteed lifetime income from their assets. And so they'll take a portion of their assets, whether it be in cash or from their 401k or IRA, and they'll purchase an annuity contract that provides them the income that they need for that need. And sometimes you just might want more income because, maybe you want to travel and you want to be able to just have extra, to spoil the grandkids and do all those things that you always wanted to do. And so there's nothing wrong with that. So a lot of times what people do is say, well, I only need $80,000 a year, but I'd like to purchase an annuity that will give me another $40,000 on top of my $80,000 that I'm already getting right now from my Social Security and my pension. Great. So now I'm at $120,000 a year between all three of those, and I've got a lot more income coming in than I need. And so when that happens, you can bank the extra money into savings and use that for big purchases. Maybe you have a big medical expense. Maybe you have a car you want to purchase every 5 or 6 years. So all those things to think about. There's nothing wrong with having more income coming in that you need and saving it for future needs. Number 5, and this is a big one. It's health insurance. Yeah, and health insurance is a big deal as we get older. It gets more expensive, and of course, usually when we get older, our bodies just start to deteriorate more and more and they need more care. And that gets really expensive. And so even long-term care needs, boy, that's expensive. That even like with a private room, a lot of times it's like $9,000 or $10,000 a month. And you might be thinking, I would just like to get $9,000 or $10,000 a month just in income. That would be great. Let alone long-term care. I can't afford that. And a lot of us cannot afford a long-term care policy. A lot of those cost $100,000 to $300,000, and they can provide significantly for our needs if and when we need that. But you can still purchase things like pensions in the form of you can purchase pensions in the form of annuities. Okay, so you can add to that income and protect yourself with more health insurance. So if you've got maybe the bare minimum with Medicare, and then you're adding all these supplement policies, it can be really, really pricey. And so it is more helpful to have income coming in to cover that. If you don't, then you're going to have to cover the out-of-pocket. And then a lot of times we run into problems where they want to grab our assets in order to give us access to Medicaid. So one thing that's nice about annuities is in a lot of states, they are 100% protected from liens and creditors. So that's pretty nice. So if you're looking for help from Medicaid, they can't touch that income that's coming in from your guaranteed contract. So anyways, it's worth looking into. All right, number 6, plan out your estate. Well, what does that mean? Well, we're talking about death, okay? At some point, none of us will escape it. We'll die, okay? We're going to die and we're going to leave behind our assets. And we want to make sure that it is a smooth transfer, okay? If you're going to leave behind assets, you might as well make it as smooth as possible. Now, what do I mean by that? Well, let's say your estate's worth $5 million, okay? And let's say you owe so many taxes on a certain portion of it, and it's due 9 months after you die, okay? And of course, things, it just depends on the laws, and there are certain amounts that are not even taxed as far as inheritance. But I'm just using this as an example. Okay, so a lot of times when you have something like that and you're like, well, I've got this ranch and I don't want my kids to have to sell it. It's been in the family for years and years and years. I don't want them to have to sell it to meet that tax bill. And so what do? Usually you'll buy life insurance, okay? Some sort of permanent policy that will provide the money to pay the taxes so your heirs do not have to sell your other assets that they want to hold on to, okay, that means something to them. They don't want to have to sell those to pay that tax bill, okay? So a life insurance policy, which I can help you with that as well, that provides the money to take care of that, to give or provide the liquidity that your estate is going to need, because usually they need it pretty quickly, and you don't want to have to fire sell your estate. Especially you don't want your kids to have to do that. If that's who's taking care of that, you don't want to have to go through that to be able to get that money to pay the IRS. Okay, so make sure, meet with an estate planning attorney. Okay, meet with the individuals and the professionals that can put this together for you so that your family is not stuck in a hard spot. Number 7, investigate your retirement investing needs. Well, what does that mean? Well, when you're in retirement, do you still want to invest? Do you want to be in the stock market? A lot of people tell me no. A lot of people say, I just want my guaranteed retirement, and that's why they reach out to me. They're looking for highest income, and that's fine. But usually when I take assets or when I recommend them purchasing a particular annuity, I will always try to give them the highest income possible from the lowest or the smallest portion of their portfolio, okay? If you got $1 million, I'm not gonna try to take it all and put it in an annuity and make a big fat commission, right? That's not the way any fiduciary should work, okay? So what I'm gonna do is I'm going to look at what your need is. Maybe your need is an extra $50,000 per year in guaranteed income. And maybe you're married and you wanna make sure it goes to your spouse as well. Well, we'll look at your age. We'll look at the time that you're actually going to turn on that income or activate that income stream. And then we're going to determine what the amount is needed for that $50,000 a year. So maybe it's only $600,000 of that million. Great. Okay. We'll put the $600,000 in and you've got your guarantee set aside. Now you can throw the $400,000 back into the stock market if that's what you wish to do. Put it in really, really high risk stocks, maybe small cap, maybe global, and be able to ride the ups and downs, and you're fine because you have your guarantees set aside over here in annuity contracts. So that's usually what I recommend. Okay, if you're thinking about investing in retirement and you want to be in stocks and you want to be in real estate or ETFs or Bitcoin, okay, whatever, it's a lot easier to invest and to ride the market highs and lows when you have the guarantees set aside over here. Okay, so that's what I would recommend if you are planning for future investments and future growth. Make sure you set aside money for your guarantees first. Okay, it just helps you sleep at night, helps you think better. Number 8, this is a big one. Learning how and when to start your income or withdraw money to avoid or minimize your tax burden. Taxes are huge, and I don't think any of us believe that they're going to go down anytime soon. Okay, so I have a lot of people who will purchase annuities and then they will convert them to Roth. Okay, you absolutely can do that. You just have to talk to your accountant first before you do it because it could be a fat tax bill. Okay, and so a lot of times it's not worth it. If your tax bracket is right here and in retirement it's going to be down here, it might not make sense to actually convert that to a Roth. It's just, when you look at the break-even age, you might not even break even with that money that you spent in taxes for another 30 years. Okay, so talk to your tax professional and make sure that's the right decision for you. Another one is deciding to retire early. And when I mean early, I mean before 59 and a half. Yes, a lot of you are retiring early, and congratulations, that's awesome if you can do that. Most people, though, are waiting till 60 or later to retire. But if you are wanting to retire before 59 and a half and you have your money in qualified accounts, such as IRAs, 401ks, then you're going to be subject to a 10% withdrawal penalty if you take it before 59 and a half. Now, of course, you got the 55 rule with 401k accounts, but you have to keep it in the 401k. And if you're trying to take that money out of the 401k and purchase an annuity with guaranteed income, that doesn't work, okay? There are certain annuities, though, like SPIA contracts or DIA contracts that allow you to put money in from a qualified account such as a 401k and start income before 59.5 and still not pay any type of 10% tax penalty. Now, you have to remember though, those contracts are irrevocable, okay? They're based off of your life expectancy. You cannot change them, okay? So usually I don't recommend them if you're looking for highest income, but they're not a bad idea when you're looking for guaranteed income before 59.5. So just remember, there's a cost to everything, and the potential cost, of course, is having just less income and absolutely less flexibility than what you would have in a fixed index annuity with the income rider that gives you the highest income possible. All right, so I know this is a lot to unpack, but I just kind of wanted to touch on this because you're at retirement or you're getting close to retirement and you're just trying to make sure that you got everything covered. Okay, I deal with this every day. I meet with retirees every day. And if you're thinking about purchasing an annuity and you want that to be part of your portfolio, you want some guarantees, then I highly recommend that you book a call. Okay, there's a link below this video. It goes directly to my calendar and we'll talk about any of your annuity questions. Okay, I'll show you everything that's available. Okay, if you want to go to my website, johnstevenson.com, you can search for annuities there. I hold nothing back over there as well. So whatever you would like, you can absolutely look at annuities and see kind of which ones are paying out the highest. And then if you want to book a call, that's fine. Okay, so happy to help. And I hope you have found value in this video. If you have, I hope that you'll like, I hope you'll subscribe, I hope you'll share it. And if you got questions, I hope you'll ask them below because I will answer them. And of course, if you want to chat about annuities for your specific retirement, then please book a call. All right, thank you so much for watching and we'll see you soon.